Today on Forbes, a Bitcoin miner promised to help a Texas town. It went bankrupt instead. Now it's pivoting to AI. 3 years ago, one of the world's largest Bitcoin miners offered a lifeline to the town of Denton, Texas, a community burdened with tens of millions of dollars in debt. The miner, Core Scientific, wanted to build a data center in the city. In exchange for a massive power contract that would double Denton's energy footprint, the company would provide much-needed revenue in the form of taxes and fees. Denton accepted. But within months of powering on, Core Scientific filed for bankruptcy after being saddled with its own outstanding debt. Now, on the heels of the artificial intelligence boom, Core Scientific has reinvented itself as a cloud computing company for AI startups. Last month, the former crypto miner announced that its Denton facility will transform into what it claims will be one of the largest AI supercomputers in North America. It received a green light from Denton's local government to increase its previously 297 megawatt power agreement by another 100 megawatts, enough to run nearly 400,000 homes, a capacity larger than Elon Musk's so-called Colossus supercomputer in Memphis, Tennessee. Many industrial Bitcoin miners have pivoted their operations to AI in hopes of boosting revenue streams after a volatile 2022 market downturn known as the so-called crypto winter. Companies like Core Scientific, Hut 8, BitDeer, and TeraWulf have all retrofitted data centers to accommodate racks of high-end chips needed to train AI models. In June, Core Scientific announced a $3.5 billion contract with AI hyperscaler CoreWeave to provide the data center space needed to host a massive array of NVIDIA H100 GPUs, for which it has allocated 200 megawatts worth of power. News of the partnership sparked a $4 billion increase in the market cap of 14 Bitcoin miners with similar computing resources, according to JP Morgan. In Denton, Core Scientific spent nearly 3 years developing data centers to mine crypto before deciding to make the switch. The transition is a relatively simple one. Core Scientific has retired its mining machines and will be updating existing buildings to support rows of GPU servers. The Austin-based company was founded in 2017 by Aber Whitcomb, who previously co-founded MySpace, along with Darren Feinstein and CEO Mike Levitt. Over the following years, it opened a number of facilities across the southern US. In 2023, after filing for bankruptcy, it received a $500 million loan from creditors, including BlackRock and Apollo Global Management. Last month, the miner reported $95 million in third-quarter revenue and $415 million in revenue for the year. It currently operates 9 data centers in Alabama, Georgia, Kentucky, North Carolina, North Dakota, and Texas. Core Scientific was drawn to Denton because of its abundance of electricity and cheap real estate. At the time, the city's local power utility, Denton Municipal Electric, or DME, had recently incurred $210 million in electricity fees during a historic winter storm in 2021 that caused energy costs to skyrocket. When Core Scientific proposed building its data center in town, a project that would supposedly deliver the utility up to $8 million a year in revenue, DME was $140 million in debt. But residents and some Denton city officials were skeptical of the project because of its secretive nature and large energy footprint. Core Scientific did not initially disclose its identity to the public, and one city council member who voted against the proposal called it a, quote, deal with the devil, as BuzzFeed News previously reported. Another council member said, quote, we don't need to allow an unidentified company to use our city's infrastructure to increase greenhouse gas emissions for the sole purpose of turning a profit. But they ultimately supported the project after DME convinced them that Core Scientific would shoulder 100% of the risk. For full coverage, check out Sarah Emerson's piece on forbes.com. This is Kieran Meadows from Forbes. Thanks for tuning in.